What's up, guys? Get started in about a minute from now. Just turn down the background noise. How's the sound? Give me a quick sound check and we'll get started. Sounds good. All right. What's going on, guys? Yeah, I got the face cam on. Let me just make sure that I have nothing up that I don't want to have up. What do we got? We have Trading View, Quant Tower, Discord, and that should be that, and Edge clear. All right, guys. I want to start off by saying that if you've been affected by FTX, my thoughts go out to you. That's unimaginable. I think that everyone right now is experiencing a significant amount of shock and surprise, to say the least. But it's a completely different story if you have actually been one of the ones that's been directly affected by what seems like crimes committed by SBF. And I say that pretty seriously. It's criminal at this point. It's pretty obvious. So thoughts go out to you guys. Words are pretty superfluous with these types of things. So yeah, I mean, it's, if you need someone to talk to, DMs are open. I opened up a new Discord, no requirements for joining. Got a bunch of people in there. I will share the link right now. Again, no requirements for joining. It's completely free. You just have to you have to do the verification, which means clicking on, you know, an emoji. Say hi to some people in the chat. Familiar faces. Ouch, Tahir, man. I can't even imagine that, man. What's up, Dave? Thank you for the, yeah, the animation is new. Yeah, will those that make it through this tough time be considered OGs? Yeah, I mean, I don't think that that's really something that anyone should really be thinking of. Turn down this music. I'm just listening to some random YouTube playlist. Yeah, I mean, if you survive these types of trials, then you have the experience that most people only read about, right? I mean, first and foremost, before I get started, you know, none of this is financial advice, strictly for, I don't want to say entertainment purposes, but it is what it is. It's today. These last few days haven't been very entertaining unless you're absolutely sick. But nothing that I say is financial advice, right? This is just my experience, how I'm approaching the market. When I share certain exchanges, like Phemex, for example, I am sharing what I consider to be a very trustworthy exchange. It seems that a lot of people were fixated on like the tier 1 exchanges being the most legit and tier 2 having issues. And it turned out to be the case that the tier 1, almost most respected exchange, biggest person in the market, was the one that did everybody wrong. But what I want to say is that regardless of who I am confident in, at the end of the day, it's all on you, right? It's your money. You got to be really, really strict with your personal security, how you spread yourself out. I have always been spread across multiple exchanges. And I got off of FTX not too long ago because it seemed like something was amiss. Just the way that the order book behaved, just the way that there was a slight lag when placing a market order. From an exchange that was supposed to be, one of the leading trading groups, for their exchange to be it seemed kind of buggy, right? It seemed like there was a little bit of a lag that took place every time you entered a market order, or when you used limit orders, it was very difficult to get filled. And if you did get filled, it was, very obviously adverse selection that you were probably on the wrong side of the trade, where the trade was going to push you to your limits to determine whether or not you were willing to hold. But, at the end of the day, that FTX, I never had it on my bingo card that FTX would have been the one to bring about all this. In hindsight, hindsight's 2020. I kind of judge books by their cover to some degree. There's a saying of, if you're in a dark alley at night, sometimes you should judge a book by its cover. If you see someone who's weird and walking weird kind of towards you, and they look like they're holding on something maybe in their pocket. Point is, like, there are these, the best way to put it is, because I don't want to say that judging books by their cover is something you should always do, but you have like these built-in survival mechanisms that are passed through generations to pick up on just things that kind of stand out, like I said, that stand out as being sort of a miss. And SBF's behavior, the way he carried himself, I get the whole idea of like being anti-suit, but there's something to be said for decorum and how you present yourself in public when you're leading an industry, rather than looking like really sloppy. But anyway, I don't want to get into all that and go down that road. But point being, wherever you are in crypto, it should never be just one place. I guess that's the best way to put it. The purpose of leverage is not to, the most common use of leverage in the crypto market is for increased exposure. So you have, a $5,000 account. You're not happy trading with that $5,000 account. You want to trade with a $100,000 account. Okay, so you're going to use 20 times leverage. All right, and then your trading is extremely path dependent. It can't move against you by a certain amount, otherwise you're liquidated. It's much different than holding on to a spot position. You don't actually own the underlying. You just are trading a derivative of it. The purpose of leverage, though, is to deal with counterparty risk, to mitigate those risks, right? So and this is always how I've been. I've never put a very significant amount of money on an exchange. I've never even put a very significant amount of money in a futures account. Even when I originally came from trading futures and now back to trading futures, I never put a very significant amount of money on the account. We might have different values for what we determine to be significant amounts of capital, but if the S&P's future contract if one futures contract is $200,000, you don't need to put more than 10% of that capital or even 5% of that capital on an exchange to represent that trade. And the point is, if you're trading on behalf of a larger balance in crypto, the benefit you have is to be able to keep that, custody it, deposit a small amount to the exchange to trade on behalf of that total capital, right? So let's say you have done well and you have $1 million this cycle and you want to trade with 1 million contract positions. You don't have to put $1 million on the exchange. You put most people I know would put 1/10 of that on and then express that positioning with leverage. So the idea is not that they're increasing the exposure, right? It's just that they're using the leverage as a tool. That's all it is. So this is, crypto is, the funny thing about it is it offers more leverage than TradFi. I mean, unless you're trading, like Forex offers a ton of leverage. But if you're trading stocks and you're trading using margin, you might get 3x. If you're trading futures, you're getting more implied leverage. But in crypto, you have your margin requirements are 1%. So you could deposit 1% of the capital you want to control. Now that makes your position very path dependent, and it can't go against you more than 1%. But the point is, you can gain control of that positioning with the smallest possible value. Whereas if you're trading legacy futures contracts, different story. You need higher margin requirements. There's certain day trading margin requirements. There's maintenance margin that you have to keep overnight, depending on whether you're going to keep positions overnight. But you really have it well in crypto with the access to leverage products and without having to KYC on all these platforms. But of course, no one uses the tool for the right reason. They exploit it and use it for the wrong reason, because that possibility is always there. Possibility with temptation is going to follow you throughout your entire life. But anyway, so remember, not your keys, not your coins. It's good to be spread out, regardless of. Look, take it from me, someone who's very confident in Phemex. I'm still spread out. No single point of failure. Never allowing yourself to be taken out by one event. And I always knock on wood anyway. But that being said, this stream's going to be very casual. I'm going to look through the chat often. I'm going to give my opinions on the market. As you can see right now, we're looking at the NQ and the ES. Interestingly enough, the correlation is still there. But yeah, so I'm going to look through the chat real quick, and then we'll get to looking at the chart, because the market's not going to go anywhere. But there is something to be said so there's a couple things, and I'll look at the chat first. And if yes, please join the Discord. I will say a couple things about the Discord. I wanted to open a Discord because I do like to give back. Early in my trading career, I had a few mentors, people that gave me the time of day. They're much older than I was, and they gave me the time of day. That was it. I didn't have to pay for their services. They just were able to provide me with value. And I don't know, what made them that way has always been something that I could relate to, wanting to like pay it forward, pass the baton back, whatever you want to say. So this is what I want it to be, is like a repository or an archive of hopefully knowledge that accumulates over time. I'm going to be sharing my trading performance here. I'm going to be sharing post-trade analysis. This last week has been absolutely insane. So I probably will retake a look at everything again, starting after this weekend. But it'll be completely free, and you'll see that there's a book channel with everything that I think is very useful. I take everyone's suggestions, what to add to it, what has helped them. I just want it to be kind of an archive, right? An archive of knowledge. And I'll be, again, shooting the shit in there and hanging out in there. But what I can't do is I definitely can't sit in a Discord all day and become like, kind of a Discord babysitter. And I don't want to say it in that way and have it come out the wrong way. But by no means is the Discord going to be my full-time job. But what I will is continue to provide what I think will be value through it. Ideally, daily updates. So before market opens, simple stuff, because things change in the market, and I don't want to like anchor with too much content onto one particular idea, and then things change, right after the open. So basic updating of levels, why I'm interested in certain areas, post-game analysis kind of stuff. But go ahead and read the welcome message. Make sure you read the rules, because part of the thing that turns me off of Discord is the level of discourse or lack of maturity. So make sure you read the rules, because if you sign into the Discord, and I feel like if I say this word, I'll probably get in trouble. I'm going to sound like a dickhead, so I'll just use that word, even though, of course, it probably doesn't sound that good either way. But I'm operating with the assumption that if you're in the Discord, you have read and agreed to the house rules. So no bullshit. So if there's any bullshit, I'm just going to boot people. I won't have it at all. I will not have it's going to be ideally a constructive place. So sign up to it. There's no obligation. You'll see a Phemex link. Listen, I've been with Phemex for a really long time now. Share the link. If people want to take advantage of bonuses that exist, every exchange issues bonuses. I want you to be exactly where you want to be because I'm where I want to be. I still use Coinbase, right? I'm not like with Phemex saying every other exchange is bad. No, Binance is the deepest exchange, right? There are other great exchanges, and I hope there are, because if you're going to continue to trade, you have to make sure, like I said, you're not too isolated in one place. Hopefully what's happened doesn't happen again, but anyway. I did not get affected by FTX, thankfully. But that's like one of the most disturbing parts of all this. There are people that made it through, Luna, 3AC, built themselves back, right? Or escaped somewhat unscathed from that, and were taken out by someone that was supposed to be their guy, right? So it's really upsetting. I don't want to like try to take advantage of the emotion or the energy right now, but I feel like the last 2 days have been a time warp. I haven't really traded much. I've just kind of stared at the screen, checking out the updated information on what's taking place, and it's been really distracting. I don't want to take away from anyone's pain or anything because I didn't get hurt, but it's shocking, right? But I wasn't affected, thankfully. And I hope that anyone who was affected knows that you could come back from things. Like, people have come back from, you never want to like give someone a comparison, right? Oh, your story is bad, but guess what? People have come back from worse. But it is really important to keep those things in mind. Like, the human spirit has something in it. I don't know what it is. Maybe it's God-given. Maybe it's given by your programmer. Maybe it's not. Maybe it's through evolution. I would assume it's a combination of both, right? There's something in people that allows them to get over and get through the worst situations. Maybe a survival instinct, right? Make sure that this person is able to get past this breakup, right? So that they go on and they create more people. Maybe make sure that they're able to get past this so that they could go tell other people that you can get past things. The point is, the saying goes, time heals all wounds. It is true, right? Sadly, in a very cold manner, it's true. If anyone's ever been in a relationship and a bad breakup, and the worst thing in the world, one of my best friends going through it right now, marriage broke up, and the sad thing is, in some months from now, he'll be over that, and he'll think, wow, I could have got over this sooner. I wish I did. And that works with most things in life, as like cold and callous as that seems for people to be able to just leave things behind, but it does. The trouble with this is money is taken from people, their livelihoods are taken, and that's terrible. But what are you going to do? You have to believe in yourself. Like, you don't have any other options. You have to be your biggest fan. You have to tell yourself, even if it's bullshitting yourself, that you're going to get through it and you're going to make it back. And listen, I'll tell you my experience. Like, I've had so many crazy ups and downs in my life, stuff that, like, a big portion of my life is not really doxed. Like, people think they know me, they don't. Even the people that think they do know some parts about me, they don't. There's things that I've gone through in my life that, I don't feel like sharing everything, but going through them showed me, holy shit. Like, I made it out of that. Like, whether physical, mental, I'm going to really take advantage of my life and make sure that I do something good. And also I'm going to remember that I made it out of that. This is a trading stream mostly. So one of the best things that you can have happen for your trading is actually to make it back from being down. Come back after drawdown. I had a few cases in the last 2 weeks where this happened. I'm trading the ES. I start off really strong. I'm trying to trade both markets, which is really stupid. I trade really well when I focus on one thing. I draw down with the ES during lunch, and I think, this fucking sucks. I just made all that, and I just drew down. I just gave that back. Back to flat, back to even, whatever. And then I sit in front of the computer very methodically, very mechanically, and trade like through routine, right? Buy my book, and I make it back. And then I think, oh wow, okay, I showed myself that I can make it back. That works through every aspect of your life, and probably way more than anything you're going to learn from trading. But you could definitely get past it. You get through it, and you'll become better, and you'll also be really happy that it happened to begin with, because the future is path determined. And without those horrible experiences, every single step in my life meant that, all the bad things that happened in my life ever, whether dodging bullets, whether, mental experiences, all of that is the reason why I'm having a kid in January. That's my point. Like, without those little things sending my life one way or the other, I wouldn't have the life I have today. And I'm eternally grateful for the things I have today. So then, therefore, I am also eternally grateful for the things that happen along the way. So you have to kind of embrace the suck. And I don't want the stream to be too philosophical or too, anything. But I think it's important to understand that. And I know when you're down, it's the last thing you want to hear. But it's kind of the only thing you should be listening to is people that have, I know it's survivorship, but have pulled themselves up. No, you never want to be the main character. All right, just going through the chat. Stevie, I'm 37. I feel like I dox my age at this point. I used to dance around like, I'm in my late 30s. I'm 37 years old. The Discord never lets me in. I'll go ahead and fix that. So futures trading below spot. That means that the futures market is trading below the spot price. So in crypto, there's a bunch of fragmentation. You have Bitcoin on many exchanges. You have different forms of Bitcoin, whether it's spot, whether it's futures, whether it's options. It's not the same, but derivatives are just exactly what they sound like. They're derivatives of the underlying, which is the spot market. There's so many exchanges, right? And there's Bitcoin trading on every exchange, but it's all kind of trading differently. So it's kind of like in crypto, every exchange has its own Bitcoin product. And I know they're all Bitcoin, but this is not like when you're trading the legacy and you're trading through the CME. And it's all centralized. So what it means when the futures, which are a derivative of spot, are trading below the spot, that means they're trading at a discount. It just means that it could mean a couple things. It could mean that the spot market is selling. So here is a set of DOMs or set of depth charts of spot, futures. If the futures are trading below the spot, it might mean that spot is buying more. So there's more buy pressure on the spot market. It might mean that the futures market is selling more than the spot market. And that could have two different implications. Sentiment-wise, when the futures market is trading below the spot market, it's indication not only are people selling in the spot market, but they're selling more heavily in the futures market. So if it's moving that much, it's kind of a big deal because, and this is if it's moving a lot, because the futures market is actually thicker than the spot market. So it's a good indication of sentiment and possibly positioning. How do I feel about stablecoins? So a couple things. Anytime anything ever happens in this market, I have a routine that I go through where I move funds around, and it's kind of like you just have to fall on your training, right? Because what happens is if you don't have a plan, so a contingency plan, when anything happens, you start getting you lose focus and you panic. So when you have a plan, you don't panic. You just go through the motions, right? As that sounds. So every time something major happened in the last year, I've taken out a significant chunk of money. And I do this not because I don't believe in crypto anymore, because I need to make something real. Oh my God, everybody's going down. Well, let me make sure that I could take money out of Coinbase. Okay, I just took out a significant money out of Coinbase. I took out money the other day. I pressed withdraw. I felt like it was going to feel like the longest few minutes of my life between getting the confirmation. And it literally hit my bank account. I'm not being hyperbolic at all, hit my bank account like 2 minutes later. So I was like, all right, so Coinbase, some people have problems with Coinbase. Very statistically small amount of people have issues with Coinbase. Most people in crypto have issues with the traditional financial system. And that's why they like crypto, because, no KYC, none of all that. No major margin requirements, no huge background checks. I came from legacy. So trading, if you're setting up a traditional brokerage account, like introducing broker, signing up, right? Edge clear. You have to go through a process where they clear you. The FCM, the broker, it's not instant. It's not like crypto. It takes time. So these things are normal. KYC is normal in the real world, in the regular financial system. And I see what, the pros and cons of each thing. But Coinbase works. It is reliable. And maybe because they're like plain vanilla and boring, that's why they are okay. And that's one of the reasons why I like Phemex too. Because they didn't try to do anything crazy in the beginning. I'm just going to make this transparent. When Phemex started and we started working with Phemex, I kept going to them and saying, you guys got to list this stuff. Like, you have to list these new coins. FTX is putting something out every week. You have to list this new tool. You have to create this kind of order type. And their response to me was, yeah, okay, well, we appreciate it. But it wouldn't get done. And then I'd question, why aren't you listing this right away? Well, we have to really make sure we do a clear security check. We have to make sure that our exchange at a base level works for the most common customer. And I used to laugh because they used to say things along the lines of like, we want to be the Chase Bank for people. We want to be reliable. We want to be boring. But anyway, you have to have a routine you go through. For me, I take out some money and I make myself feel like it's real still. And that's it. Stablecoins, US for me, right? USDC, Binance USD, and then Tether. BUSD and USDC probably top of the list. USDC, you're going to see like they had investments, nominal investments in FTX. Like they have a venture arm. It's a small thing. They are on their own, delta neutral, and as legit as it comes. So I'm listen, you can never say never in this market, but if you want to be here, you have to commit to something. And again, spread out, right? Yeah, I'll drop a new Discord link. And we'll take a look at a chart. I just feel like a lot of talking is necessary. There you go. Yeah, Adrian, that's a great point. And even further back than that, just think the fact that you're alive is statistically a miracle, right? It represents like an unbroken chain since the beginning of time. So clap it up for your ancestors. Yeah, the hardest times are what make you great. I feel for anybody who has never been through hell. Futures now wagging the dog. Yeah, futures are pretty normally responsible for price discovery. So, CME futures I don't really focus on. Like I could trade CME futures through my brokerage account, but it seems mostly algo driven. It's very thin. Margin requirements are higher. That's not a big deal, but it wasn't a good contract size for most people, honestly. For Phemex doesn't use, they don't have their own coin. Oh, Phemex has USDC, it has USDT, and they also offer USD for people that are KYC. Yeah, your ancestors got you here. All right, so a couple things about the market right now. I put out a tweet this morning and I deleted it. Like I delete tweets that I don't like. Like if I put something out and I feel like I fucking said something stupid, well, hope you screenshot it because I'm going to delete it. So I said, this is financial advice, sell alts. Okay, so let's clarify because I added on top of that. And my assumption is always I'm going to add to a tweet. People are going to see this right away. You got to remember sometimes your tweets are just put out there in isolation. Someone doesn't see that you've added to your tweet unless they click on it. Otherwise, it's just passing them by as a single tweet. So I wrote, I followed up on it. The thing with alts right now is there is a huge fallout there's going to be a huge fallout from what's happened. And I could be wrong, but I think that it's more likely that there will be. Now, we don't know. We're in the dark right now. So you're going to get these things coming up on Twitter, a bunch of rumors, and again, it's up to you to do your due diligence. But there are a lot of projects that probably had their treasuries with FTX. They were the most trusted people in this market. The fact that he had his employees invest, keep their money with him like a bank, and then did what he did is it's mind-blowing. But with alts, there are some alts that are just, they need to be liquidated. These projects are wiped. So for me, I don't want to, like, if you're in alts right now, if you believe in something, more power to you. I don't know shit about anything I don't know. What's that line from Ozark? I don't know shit about fuck. What I will say is, though, you're playing like a lottery that you don't want to play. It's very likely that alts continue to suffer, but how do alts suffer? So I think this is probably important just to remember how the market moves. So alts suffer like, oh, wait, let's change the color. Where is that drawing tool? It's on one of these screens. All right. Alts suffer like that, right? When you're really zoomed out. But they suffer like this. All the way down. Unless it is a major catalyst like FTT, right? A few other things, Luna, or it's just one-way trip panic mode on the way down. Where we are right now, after there's been a fallout and things have kind of calmed down, but they're not calmed down, but you understand what I'm saying. They're going to continue to squeeze on the way down for reasons of people shorting the bottom, right? Crowding, getting in positions that they're not going to hold because they're going to be painful to hold, even though they might be directionally correct. Because these projects might manipulate to get out at more favorable prices. Either way, it's not to say alts won't go up. They will pump. And this is another reason why it's, if I said, you know, for example, we'll just talk about myself. I'm going to sell any alt that I own. Now, I'm not, truth is I'm not in any alts, right? The last alt that I got rid of was FXS. So FXS, I got rid of earlier this week or last week. Was in a very significant position, right? You guys know my opinion on alts, but I did have a position. I began to tag on a new position. So I got rid of everything, but it doesn't mean because I think things are going down that I'm going to start shorting things. No, because it's much easier for something to move up 150, 200% than it is now to continue to break down. It's going to continue to break down, but sort of this slow, gradual breakdown, I think. And along the way, there will be really nasty squeezes. And that's what jump risk is. Like, out of nowhere, just think about news trading, why it's taken off recently. News trading's taken off, getting access to some, breaking information, becoming privy to it. Everyone gets access to it. The thing moves 100% in a couple minutes. Even less time than that sometimes. Now, this is when people are getting into position. This is not necessarily, panic behavior in and out is kind of the same thing. Panicking to get in, panicking to get out. But the mechanics are just as violent. So I definitely wouldn't look to short alts necessarily unless you got some crazy lucky entry. Things are really thin across the board. So this is a breakdown of markets right now, and this is an aggregation of $10. This is your spot. This is your futures markets. There's a couple of them, or more than a couple, but you get the idea. And you can see that when you're looking at this depth of market non-cumulative mode, it's not exactly stacked, right? There's a few orders and tranches that are separated by maybe 50 to 100 basis points, probably just wider spread market makers. And that's it. There's not a whole lot here. It's easy to get this thing going. What I will say is, though, if you look at, for example, what's happened, something major, something idiosyncratic. But if you look at, for example, and this was until recently, this is sad, right? All morning before that, BTC correlated to the ES. Now the ES continuing to go up, the S&P going up into the close. It's not closed yet, but going up to the latter half of the day. And Bitcoin not following finally, but it was following earlier. I say it's sad because we had what was a positive response, like we left behind this gap post CPI. So looking at the S&P above what I considered the most significant contextual level off the lows, which was that 39 level, prior multi-week high, multi-month composite, weekly pivot on the way down, acting as support and resistance on the way back up, same thing. So we're back above that zone. So by all means, like the next area I look to is for price to continue to hold this midpoint now, put in higher lows through here, and you're looking at ultimately a target, the top side of this range. I mean, more often than not, we'll see price kind of cover that over time, absent any major changes. And it's sad because, and whatever, there's worse things, like people lost their money, but I think it's even worse if we have a good move now in legacy and crypto is kind of crippled for the time being, or it's even worse if crypto starts being good and moving up and these people are fucked over without their money and they were in good position. So CPI led to a positive response. More importantly, before this breakdown, markets were responding, and this is some of the most important, these are some of the most important details to pick up on. High time frame wise, markets were starting to respond really positively to good news, and they weren't responding to negative news. So that's a really important sign. It's the exact opposite of what happens at the top. Markets start becoming, it's like the narrative continues to move up and price is no longer moving up. And then a little bit of negativity comes in the market and whoosh, there's a lot of sensitivity underneath price. So it's the exact opposite right now. It's like, well, we're going into a huge recession. Everything's terrible. Left and right. So there's evidence of just why markets shouldn't move up, except they move up because of positioning. They move down because of positioning. So instead, the markets continue to move up. And I think that we're looking at, it's not a pivot, right? But I think, like I said, 2023, I think we see them pull off, slow down, which is going to be interpreted as it's going to make markets rip. So you see the SPX front running that. There's a lot of buyers right now. There's CTAs. There's a lot of structural sort of mechanical buyers or systematic buyers. And crypto is, unfortunately, should be riding that as beta, but isn't. But it's entirely possible that this move, as bad, this sounds terrible, but it's really important to remember that bottoms happen in hell. That's the best way I could put it. You think in advance, the bottom is going to be a structure on a chart. All right. So in advance, the market's going to move down and we're going to base out and it's going to be comfy cozy. You leave out your actual emotion when that's happening. And the emotions during a bottom, usually that last spike, are always the sky is falling. So I would be lying if I didn't say that, wow, so I said in June, I think the market bottoms in Q4. We're bottoming in Q3, I said. I think the bottom tick comes in June 4, and we start moving up Q2 2023. I said June 4, I mean Q4. So bottom tick right now. I'm not going to say that this is the bottom, but my point is you get the idea. It would be absolutely just, I don't know. I think it would be even worse. But as far as market structure goes, because we have done something that I think is worth looking. And I don't like to go over the high time frame too much, but as far as our high time frame market structure, we were dancing around prior all-time high, clearly nuked that, took out the most significant levels on the chart more locally, took out the lows, retested them from the underside. I will become bullish if this is able to march back up under these lows, or rather into these lows, and hold the underside of the structure again. The most bullish thing that you could have is when you have, and this implies that you are behind it though, right? Because, you know, you've waited this much, but I'd rather buy into a rising, stronger market. The most bullish thing would be price comes back up here, holds not only here, but is treating the top side of this structure as support. Then it's, you know, it's very clear at that point that this was your larger deviation. You brought in a ton of panic there, and regardless of all that, now the market is retaking levels it previously had trouble with. Where we sit right now, though, really bad spot. So we need to reclaim that. I don't think that the market is just going to find support right here and continue to flag and then continue to move up. Like, oh, we're just going to walk this off. I don't think so. I think that this is sitting on a precipice right now. And if you're looking at it from just a volume standpoint, one sec. Here we go. This is a significant gap. So really the most significant level back on the chart, and this is like you'd think like this if it was low time frames as well, is where the meat of the move occurred, right? Where the meat of resistance was at the time. And that's right back down here around, you know, between 10 and 12K. There's nothing really here that should technically act as support. Price should move pretty easily through gaps. Ultimately, what you want to see with gaps, so high volume node right here, high volume node picks up here. This is a low volume node. This is a low volume node, low volume node. You know, we haven't been up here. We haven't spent much time down here, so that's obviously why those are the case. But what you want to see with gaps is that price respects the ledge. So this is kind of, you know, it gradually decreases. It's not like there's a clean ledge like if you're looking at a TPO chart in some cases. But if you were, you know, if you're still above on the march back down to this gap, you would want to see that the ledge catches sellers offside, and that's where we find support. Otherwise, there's unchallenged positioning from down here. Not to say that that positioning hasn't turned over, but it's just a concept from lower time frames. And that kind of inefficient move up without much structure established leaves a really easy area of market structure to move back through. And I gave the description of, you know, building a retaining wall, right? When you build market structure like this, like this, like this over time, these are thick areas, right? You're filling this area out. You're stacking cinder blocks. When you move up like that, right, and you leave all of that structure, that's just like an area where you've neglected to stack bricks. And this has been, you know, I've used the tree trunk analogy before. I try to use like the idea of physical structures because it is very helpful to understand that, again, you're sitting on top of this thing. It's trying to support you, but there's no real reason why it should support you. And there's not a whole lot of reasoning right now why anyone should step in if price moves below there. It's almost like it should very easily move back down to that structure. So that's what we're dealing with right now. Low time frame wise, I think a lot of people are getting chopped up, right? I mean, we have no idea yet who needs to sell Bitcoin to make themselves whole, to make people whole. We don't know who's going to come down, you know, and wash up, or I'd say not come down the pipe, which was that analogy or metaphor am I using? Analogy. We don't know what's going to wash up, right? So, you know, you had a squeeze yesterday. You have to understand, though, in these larger moves down, you've wiped out a ton of positioning. You brought in a ton of selling. You make the move easier back in the opposite direction. So you've taken sellers out. Moving back in the opposite direction becomes a lot less restrictive. There's a lot less friction. So big moves after big moves down are not hard. It's a lot of times it's just the market mean reverting, and you're forcing shorts to cover that built up at the bottom and sold the bottom. Let's look at Coinalyze real quick. Just to get an idea of open interest. So open interest is wiped. You can see though, here you go. Into the low is a different story. Peak negative funding right here, right? No more long liquidations really coming in. So kind of tapered off. Then you had that big rally in open interest, or big increase in open interest into the low, specifically up to that point, right? So that's the peak of it right there. And that's into the low after that long move down. And then ultimately these moves back in the opposite direction are easy because you're just squeezing out shorts, right? People hedging, people shorting outright, expecting, much larger puke at that point. So yeah, I would definitely say that swings right now are absolutely off the table unless you reclaim significant areas of market structure, or we move much lower into the next meaty level. But right now, I think most of, and this is like always something I've been doing all year. Most of the focus is just on low time frame trading. So scalping, trading intraday, getting out of positions fast, because ultimately it's not taking much for price to move against you when you're on the wrong side. Let me just look at the chat. I mean, ultimately, if I was going to look for something a little bit more substantial again, it would be probably a revisit of these lows down here. So I haven't had a TPO chart out for BTC in like a day and a half. So we just have the volume profile, but you probably have something along the lines of a poor low right here. So it looks like it. There's not much of a, if you're looking at a TPO chart or market profile, you'd want to see some kind of excess. If you're looking at a 30-minute chart, you could kind of see what you would see on a TPO chart, right? Because it's built by that. This would be excess, so you had excess back here. This is not excess, so you have a poor low down here. So not exactly the kind of low you would want to see for a low. So this kind of stands out as a target, whether that's just for a cleanup or whether that's where we continue to mark down. It just is. It's the next real significant area that I'm going to start paying attention. Yeah, I mean, if you look at it on the daily, that's not exactly the kind of candle that you see. And I know this is very simplistic because this is just looking at the candlesticks, but that's not the kind of candle you see at the Pico low, right? So just kind of mark this off as an area where it's either going to get stop ran, or if anything, to keep you from knife catching this, thinking that you have bought the bottom, versus what ultimately bottoms more so look like, which is whether it's the beginning of them, right, or just any other major cataclysmic move. If you don't have one that's really sharp, you at least have many on the way down before a very responsive move by buyers. So not there yet. Just the first significant short squeeze, it seems. And my point is, like, maybe that does happen right here, right? But if I was long right now, I wouldn't be very confident. And at the same time, I don't think it's dangerous to short right here. Your risk is kind of capped. I mean, it's not capped, but here's the low. You could basically, place a stop into that structure, and it's a reasonable trade, I think. And it's very simple. Multi-month balance. First significant move out usually involves continuation. So whether that does this or whether that was going to do this, you don't want to fade the first leg, I think, and I think that this one has a little bit more merit. I'm being very cautious because you don't know what's about to, maybe nothing happens, right? But it's a very risky environment right now to be hoping. So a short right now actually is not that. Listen, from a risk to reward standpoint, like I said, if this market does not reclaim this range in the near future, it's more than likely coming back down here. So from, I never put these on my charts. You'll never really see me use this. I always think it's such a joke. Where is it? From a risk to reward standpoint, even if you used the high, it's more than a 1-to-1 trade. Now, you wouldn't use the high. I mean, that would be a small position, right? If you're correctly positioning this for a 25% move against you, you trade a 25th of the normal position size, right? That might not be attractive. But if you're trading this and you are looking at this high, right? So let's say you're involved here, and you place a stop above that high. Is there a reason why I wouldn't swing at that? I mean, this is the most significant move you could ask for outside of a range, so you usually don't want to fade that. And yeah, the S&P looks very bullish. You want to see this 39 level hold. I mean, locally, so I have a couple levels on my chart that I don't often talk about, but I'm going to start sharing more of these things in the Discord. So I'm a flow trader, right? So I use a combination of order flow and market profile and market structure, right? So there's narrative, market structure, profile, order flow. I'm synthesizing a lot of different things. And the ES and the S&P have traded very technically as of the last year. But there's a few other things that I focus on as well. So I will look more in the S&P at something like the initial balance. So this is for regular trading hours. So after the cash session opens, not like overnight hours or after hours. So there's a few levels that you'll see I have marked off on this chart for just intraday trading, the S&P. So it's the 30-second open. 30 seconds after the open, I'll mark off if there's a prior day gap. So between the regular trading hours for the S&P, so that gap was down here this morning, the 30-minute open, and then the hourly open. So 30 seconds in, we're looking at this first candle right here. These first two candles is a 15-second chart. Ultimately, what I do is I take the first trade outside of this balance, right? So you'll have a lot of activity right after the open, and I'll look to get behind that first candle that expands out of that 30 seconds. So this is normally a pretty easy shooting fish in a barrel trade for the first trade that I'll take in the ES after the cash session opens. And in this case, that trade sitting above, we had sort of this stop run here flush. That trade was sitting above a gap. Ended up running all the way through. I didn't trade this. I didn't trade the ES today. I was marking off the levels. I ended up doing a podcast, and then looking at the 30-minute range. So 30-minute high to low, that's your low, that's your high. We ended up clearing the gap before then. Here is the 30-minute close. This is the point in which right here this closed. And then looking for kind of, at this point, balance is formed, days semi-balanced, looking for either fading bracket extremes or possible acceptance through extremes. So the first move, you had a fake out, offered a nice move back to the mean, and then we ultimately followed through, accepted outside, and you're looking to just go in the flow, go with the flow at this point. So go in the direction of the flow. I mean, since then we've obviously marked down, came back, retested. But yeah, very strong and unfortunate because Bitcoin, it's like wants to follow this. My daily performance off of, I mean, I look at my P&L, but I don't think it's a good idea for you to judge your performance based on, you don't want to be focusing too much on your P&L. You don't want to be trading your P&L. So whether I effectively took setups, things that bother me are not losses. They're losses that, so you're going to have losses, right, due to variance and things you can't predict, right? You cannot predict exactly what's going to happen. But the worst losses are the ones where you've made actual, forced errors. So where you clearly overstepped your bounds, didn't cut a loser, things like that. Just poor execution. Seeing a setup, not taking it, missing out, being slow to it. Obviously, not looking at alts at all right now. I mean, next possible, as far as like local longs for BTC, I mean, I would need at least we were back above this today's POC and volume value area high, so above 17.5, and then maybe we're looking at some kind of move back up to this local high. But right now we're back within yesterday's value, right around the POC. Volume today sitting above us. I mean, if we look at VWAP, that's our weekly VWAP, hanging out towards the low value. Put this on daily. I mean, getting back above today's value, that'd be a good sign in the short term, but wouldn't necessarily bet on it early. Oh, thanks, Caesar. I hope I know what I'm doing. Been doing long enough at this point. Yeah, this is the weird thing about this is yesterday I was looking for the possible fade because of this major gap we had. So looking at the ES and this is like 4%. I feel like, I don't know, was this 4% up right after the open? I mean, that was just a massive move. CPI candle. Now, yeah, the open was around, so go to the S&P because then we'll see to the open. Yeah, 3.5 points. Pretty significant. So just one-sided all day. There's been a couple gaps in the recent past that haven't gotten filled. So back here. Down at this low. But, I'm not saying that this is not going to get filled. I think more likely it does. But when we're within close proximity to a gap, and this was like, again, big move by CPI, if it was this kind of move without that CPI print, I would be more prone to looking to get to fade this move in the direction of this gap. Looking for the loss of momentum, looking for that to play back through this gap. But now, as far as the S&P goes, as long as like 39.40 holds, this is probably good to just continue to move up. If we start trading back below 39.40, you're probably looking at some of these lower areas around like 39.25, and then you probably come flirt with the 38s and below. And then same idea for BTC. This is not really much, right? So if price trades back below 38.70 region, just expect it to move pretty rapidly. So after this move, was debating, a few times where I'm thinking, do I start looking for the short to just close this gap? But it was clear that it was just very one-sided. This market's very different than, they might trade, look similar. Hold on one second, because I just want to make sure that it's not a big deal. I don't think you could do anything with it, but just not dox everything. A lot of the times, this market will look like it's going to, every time that it moves up, it looks like it's going to reverse. But yeah, back above 4K now. I don't know why this is taking a second to load. It's a great platform, by the way. Yeah, being above 4K, that's quite a significant psychological level. But again, that's one of those major round numbers. So I don't know. I'd be a little careful right now buying. I want a little bit more of a pullback to, like I said, there we go, 39.40 region maybe. Let's link these up. There we go. So the good thing about this is like the DOM will link up with the footprint. So worst trade I'd taken recently. Well, I didn't take those trades. There was more than one hockey error in the last 2 weeks. One was a cat, obviously it's different, but I was setting up my stream deck for hotkeys for this. And I just made an error, quickly got out of it. My nastiest error in the last 2 years was, I mentioned this before, closing out a price was breaking down. This was going back to May, I think, May or April. Price was breaking down. I had a tail risk stop on. I didn't have a tight stop on. I was manually closing the position out. Things started breaking so fast that I hit sell instead of I hit buy instead of sell. So I added to my losing position. Like imagine like prices cascading down. Wasn't painful, but I was trying to exit the position manually. I had a stop loss on lower, and was trying to exit before we hit the stop loss. And instead of exiting, I added the same exact size that I was in position for, and then I hit my stop loss. And as this is happening, it's the worst kind of conditions to double up a position anyway, because the book was, again, if you're cascading, there's nobody in the book taking, the book is just evaporating. So I dump an empty position to get into position. By buying in, I lift an offer that's not there, so I slip as price is falling, and then right after that, my position hit the stop loss, which is cascading with everybody else's stop loss. So it was, I remember it was shocking to see, because I didn't see the P&L register for the trade yet. I didn't click on like latest trades. I had hovered above, like, on exchanges, you have like a thing on top right, assets, you hover above it, you can see your assets. I remember hovering on that and seeing how much I lost, and that being really shitty. I think that was like the last time my palms got sweaty. So a lot of the times with these strong trending moves, if I'm looking to get in position into a trend in progress and we're clearing market structure, honestly, I'm going to look to get involved in an area like you're seeing right now. So one of the first pullbacks to one of these these VWAP standard deviation bands, because it's sort of like dynamic value at that point. On the profile, you can see exactly where it lines up. This is now the third pullback, though. The thing about the ES I think that's really important is understanding average rotation size is more than something like Bitcoin. Because you might look at this right now. You see this chart right here. You see a 3-drive structure. And you think, well, if this is Bitcoin, it's kind of toast on the low time frames. It's going to throw much lower to the downside. The ES will look like this all day. The NASDAQ, same crude oil. All these products that have real HFT, so real high frequency trading, black box type of stuff, the best of the best market makers, co-location, all that. It's just fake outs all day. So if you don't know that the average down move is 4 points, right? Or the average rotation size is 3 to 4 points, then you're going to get fucked over all day thinking that you're taking part in a new trending move. Because we just engulfed the last 5 minutes worth of progress in one candle. And it's like, nope, sorry. We're going to do that for the next 10 minutes over and over again and just chop you up. So something like this, for example, I want to say, like, all right, if I'm looking to long, it's changing now, and I would be more so looking to short. We're falling back within prior market structure at this point, back inside of value, losing these VWAP bands, but you'll see that this might spend a long amount of time doing that before ultimately dropping. And maybe we'll get a good example right now. Maybe it'll stall out and reverse. I mean, it's kind of dumpy when you have the volume above the high like this. You got that 270 sitting at 39945. That's not much, but it looks like they just split that across two prices. So it looks like that was just placed at 39.92. So maybe trying to push this down. Now just think of the liquidity difference between this and BTC. Each contract is $200,000 basically notional. There's a lot more depth. So some bigger sells starting to come in. So if you get big sells coming in, or just the tape begins to speed up, you want to see that there's continued progress down. You start seeing those big sells come in and have large orders indicated, and the market's not going anywhere. Well, that's probably when you're going to get one of those snapbacks. ATR is a good tool to use to get an idea of it. Yes. Some people pay attention to like harmonic rotations. And this right now actually has a poor high and a poor low. So looking at today's profile, poor high, poor low. Yesterday finished with a poor high. But look, you're starting to see that again, right around that value area high, where it looked like the market might reverse back into value, you're getting a good amount of selling and volume that's coming in that's actually staying bid. So we'll see. A little bit more imbalance in the order book right now, sitting above us, but I mean, more often than not, I see that and I think, all right, we're going to probably tag that. Anyway, I think I'm probably going to wrap the stream up. Just wanted to talk to you guys and shoot the shit, and if anyone wants to join the Discord and come in there and talk, feel free. This is looking kind of ugly. So yeah, this flushing most of that positioning out. not a whole lot of reasoning to be confident. I forgot, this mic you have to talk pretty close, so I'm sorry if I kind of drifted off there for a second. Now, there's a list going around of alts that FTX is connected to directly, and that might be something worth looking at. The Discord link, I'll share it again. That should work, right? And then this verify channel, you just have to react to one of these, and it looks like everyone's kind of following along. So ugly. One thing, don't panic. But one thing that I do during times like this is, and then I'll wrap it up, is I do keep on my watch list the stables. So USDT, USDC, just to keep an eye on if things really begin to change. Not something I'm thinking about right now. So I don't think there's any cause for panic. All right, guys. Enjoy.